Hi. In the previous session, we are done with the insurance, right? Claim on loss of stock as well as loss of fire. Okay, sir, we are done. Today we are starting with new chapter, sir. New chapter. Which is the new chapter or a new unit, you can say. Which is the new unit, sir? New unit is hire purchase. New unit is hire purchase. Okay, sir. New unit. So I mean new chapter. Yeah. New chapter means new story. Yes. Okay, sir. Give me a second. Give me a second. Okay. My pen is not getting connected. Give me a second. I don't know. Today something has happened. Something has happened to all the devices. Since morning mic was not ready. Now my pen never did this. But why today it's doing, I don't know. Okay. See, hire purchase, what happens? Let us assume there is one person, Mr. A. Okay. And there is one more person, Mr. B. Mr. A, he is a trader. He wants some goods and all. Okay, sir. He is a trader. He wants some goods and all. Yes. But Mr. A do not have the money right now. Mr. A want the goods on the credit. So now when he want to purchase on credit, he is telling after 6 months I am going to pay you. So B said no boss, 6 months and all I can't give. Sorry. So A said fine. Every month I will pay. So B said okay fine. Every month you pay. I mean in installment they will pay. When they pay in an installment, it is called as hire purchase. It is called installment sale transaction, or you can say hire purchase. And after the payment of all the installment, ownership will be transferred to the purchaser. In our case A. Sir, what are you talking? After all the installments? Yes, after all the installment. Sir, what if A fails to pay the money? B will come to A's go down. Whatever is available, he will take and go back. That is called as repossession. So in a hire purchase, if the payment is not done, they are going to take it back. The hire seller, the person who sells goods on hire purchase basis, is a seller, and I mean hire vendor you can say, that also you can say, whereas the person who receives goods is called as hire purchaser. Okay, so he will come to the godown of hire purchaser, he will take the goods and he will go. Sir, now whether hire purchaser will get back his money, whatever the installment paid. For example, let us assume he has paid an installment of 5 installments. Okay, 5 installments he paid. Okay, great. 5 installments he paid. Great. So when he paid a 5 installment, sir, whether only 1 installment he didn't pay. Now B came and he took out the goods of A. Now whether A will get the reimbursement for that 5 installments because his goods or his assets is going out. No. Whether he will get reimbursement? No. No reimbursement will be made. No reimbursement will be made. Okay. Shall we continue now? Shall we continue with the chapter? Just brief intro I gave, that's it. How the accounting and all happens, that we will see. Okay. So the chapter is hire purchase and installment of sale transaction. Installment sale transaction. Okay, done. See here. It is not always possible by a purchaser to meet up the higher demands for a goods due to immediate cash payment, right? For a immediate cash payments basis, due to those things, purchaser will not be able to meet a higher demands because he will not be having goods. To meet this concept, the hire purchase is very popular in the market. So meet this problem. To sort this problem, hire purchase is very popular, it seems, in the market. Okay, sir, done. Under this system, the purchaser, that is also called as hirer, pays the entire amount in a staggered way, that is in installments, monthly, quarterly, yearly, with some interest, of course, because the seller is blocking his money as well as goods. The seller is blocking his money as well as goods, which means he should get something in return. No, he should get something in return. That return is called as interest. Okay, sir, done. Under this system, the goods are sold with the following condition. 1. Possession of goods is delivered to the hirer, but the title of the goods, that is ownership of the goods, are transferred. Ownership of the goods are transferred only when the agreed sum is paid by the hirer. That is, now see, it can be for the goods or it can be for the assets. Okay, it can be for the goods and it can be for the asset. Let us assume we are purchasing some asset. Cost of asset is rupees 10 lakh. Cost of asset is rupees 10 lakh. We do not have so much money. Right now we have only 2 lakh rupees. Remaining 8 lakh, we are telling that we are going to pay in 8 yearly installments. 8 yearly installments. Okay, 8 yearly installments. So how much we have to pay? 8 lakh. But do you think 8 years he is blocking his money? Will he block it for free? No, he asked for interest. So we will say fine. Per year we are going to pay you rupees 1,20,000 rupees. 1,20,000 is a installment. 1,20,000 is a installment. He agreed now. Now the goods or the asset will be transferred on the date of agreement itself. The goods or the asset will be transferred on the date of agreement itself. But ownership will be transferred. Ownership will be transferred when, sir? After last installment paid. So possession when, sir? Possession is when the contract is entered. When the contract is entered, that time possession will be taken. When the last installment is paid, that time ownership will be transferred. You will become owner. Until then, owner will be whom? Hire vendor itself. Okay, so that is not our asset, sir. Your asset only. How, sir? But the ownership is with owner, no? We will see substance over form. Okay, listen here. Such a hirer has the right to terminate the agreement at any time before the property so passes. That means he has the option to return the goods, in which case he need not to pay any installment falling due thereafter. That is, let us assume 6 yearly installment we paid. 6 yearly installment we paid, and now we are feeling like, okay boss, we don't want this asset. Okay boss, we don't want this asset. So we can stop paying. So once we stop paying, the goods will go back to higher vendor. The goods will go back to higher vendor. Okay sir, done. However, the hirer cannot recover the sums already paid, as such sums legally represent a higher charges. So for 6 yearly we paid, no, total how much we paid? 6 year installment we paid. 6 years into rupees 1,20,000, no? 1,20,000, which will come to rupees 7,20,000. Rupees 7,20,000 plus in the beginning we paid 2 lakh rupees. That what we pay in the beginning is called as down payment. All those things I will tell later. What is the value of the asset? The actual value which what you have to pay if you purchase today, right now, without hire purchase agreement, what you will pay to the asset to purchase that is called as cash price. Okay, so down payment is how much? 2 lakh rupees. So total you paid 9,20,000. But the thing is, after 6 years, if you want to send back the asset, you are not even getting a single penny out of this 9,20,000. I repeat, you are not going to get a single penny out of this 9,20,000. This will be treated as rent for asset usage. Rent for asset usage. So this rent, with love we call it as higher charges. That rent for the asset usage, with love we call it as a higher charges. Okay. Okay sir, done. So far it is done. The hire purchaser during that period of possession of goods cannot damage, destroy, pledge or sell such goods. So hire purchaser will be there, no? In our case it was A. It was A. He can use the goods. He can use the goods, but can't do what and all, sir? He can't damage. He can't damage. 2. He can't destroy. He can't pledge. He can't sell. He can't sell, which means he can't damage, because let us assume we purchase some car. We purchase some car that is of rupees 10 lakh. Okay, that is of rupees 10 lakh. Sir, whole world is going towards SUV and you are still in the sedan. What to do? I love sedan, but that is looking like pickup, sir, not even a car. No issues, let it. Now it will look like car. Okay, done. Now we cannot damage the car. We damage the car and we kept. B came after 6 years. Boss, where is the payment? We said payment we are not going to give. So B said, fine, I am going to take back the car and I am not going to give you a single penny back. So we said okay. And when he saw the car was completely damaged. Now B can get a recovery from A. B can recover that money towards a damage from A. So A is not having any right to damage the goods. Second one, destroy the goods. Same. Pledge the goods. That is, A did what, you know? A went to the banker. A went to the banker and mortgaged the car. A went to the banker and mortgaged the car for rupees 5 lakh. Now B don't know this. B took and went back the goods. Now next day banker came to the house of B and they took the car back and they were like, you repay the loan, later we are going to give the car. But actually loan taken is by whom? A. But who is suffering now? B. So to avoid this, even your hire purchaser cannot pledge. because pledging can be done only by the legal owner. Who is the legal owner here? B will be the legal owner. Who A is what? A is just mere a possessor of the goods or asset. When will the ownership transfers? On the last installment payment. After the last installment payment, no? After last installment payment, the goods will be transferred. I mean the ownership will be transferred legally. Okay, done. He is supposed to take care all the such care of goods as a prudent person does in his own goods. Now let us assume A took all the care, but still car got damaged. A took all the care. He used to wash the car, he used to put a cover on car every night, he used to, you know, safely move the car, no scratches, nothing. But still what happened was, tsunami came or some flood came, car got damaged. But A took a due care, no? A took a due care because he treated that car as his own car. Now B can't recover that. B has to bear that loss. But if A do not take on a due diligence, due care, then B can recover it from A. Okay, sir, done. In case of installment sale, it is not only the possession of the goods, but also the ownership in goods will be transferred to the buyer immediately at the time of agreement. This is what I explained is a hire purchase. In case of a installment, what happens? In case of installment, not only the possession, even ownership will be transferred to the purchaser. Sir, in hire purchase also it's transferred, no? But in hire purchase it is transferred when? At the end payment, right? But here when it is going to transfer possession as well as ownership, in the installment purchase, possession and ownership will be transferred at the time of agreement itself. At the time of agreement only. At the time of agreement only. So what is the difference between hire purchase and installment? Installment payment is there, but in case of hire purchase, what is happening, sir? In case of hire purchase, ownership will be transferred after the last payment of installment. In case of our installment sales, it will be transferred at the time of agreement itself. Okay, sir, done, understood. Guys, tell me one thing, whether mic is performing the same way, or is there any difference between the mic we used to use till now and today's mic? Is there any material difference? It's good only, no? Yesterday's wasn't good? It was. So you can say like par, both are par only. You can't make any difference, huh? No. Okay, fine. Okay. Further, in installment system, if the buyer stops the payment of dues, then he does not have the right of seizing his goods. I mean, in the installment, no, in the installment, as ownership is transferred, your buyer is just your debtor. You are no more the owner of the goods. You can't go and get your goods back. For example, if you get your car back, B goes and get his car back. If it's an installment system, A will give a complaint to police. Police will say, boss, ownership ownership is in the name of A. Then how can B get a car? He will say, no sir, he is not paying last installment, so I possessed. No boss, he is just your debtor. You can't treat him like that. His car and you now do not have any relationship. Only him and you have relationship. You go and take and go A, then we will not come. But don't take and go his car. His car is his ownership. Okay. So he will become just a liability, mere liability. Asset will completely go off in the installment sale. See, ownership stipulates the time at which the ownership passes to the buyer. It is usually on the payment of last installment. Installment sale, ownership passes at the time of sale itself. Default in making payment. Seller can repossess the goods, that is they can get back the goods. In that case, the installment so far paid is treated to be higher charges. Seller does not have any right. Seller does not have any right except the right of suing the buyer for the non-payment of price. That is, you should treat him as a debtor and you should take him to the court for non-payment. Okay. Right of sale or otherwise. No right to sell or otherwise transfer the goods, since the legal possession is with the hirer only. To get it registered to someone, higher seller should come and sign, which is not practically feasible. So in hire purchase, you cannot sell the goods when you are still in the contract. But whereas in the installment sale, as you are already the owner of the goods, you can sell. Right to sell or otherwise transfer the goods. Loss or damage. Any loss occurring to the goods has to be borne by the seller itself. If the buyer has taken the reasonable care, I told no flood, he has taken enough care, but still it is going. He can't do anything. And now the ownership is with whom? Ownership is with the seller, which means basically ownership is nothing but your risk. Ownership is nothing but your risk. So risk is with whom? Risk is with seller. So if anything happens, who has to bear the expense? Seller has to bear the expense. Okay. Any loss occurring to goods has to be borne by the buyer, because now the buyer is the owner of the goods. Okay, listen very carefully. Listen very carefully now. There is some concept called substance over form. There is some concept called substance over form. There is some concept called substance over form. Sir, what do you mean by this substance over form? Sir, substance over form. What do you mean by substance over form? Substance over form is something like, legally you might be the owner. In a hire purchase, in our example, A and B, who is the owner, boss? Legally, legal owner is B, boss. Legal owner is B. But at the end of the day, the asset will be going to the hands of A, right? The asset will be going to the hands of A, right? So when A enters into agreement, it will be treated as A's asset. So he will become an accounting owner. Although legally in the documents B is the owner, as A's intention is to purchase it, and after the payment of all the installment he is going to get the goods. Right now he is acting like his own asset. So as per the substance over form, the buyer itself will be showing it as asset. Okay sir, okay, fine. So far you understood, guys? So far is it clear, people? Yes, right? Am I going fast? Okay, fine. Suganti madam, no response. Why? You fine? All okay? Not listen. Okay, fine. Fine, sir. Fine. Now, in our example, value of asset was 10 lakh. We paid 2 lakh rupees in the beginning. This is called as down payment. So this is called as down payment. The 2 lakh which you paid in the beginning, at the time of agreement, if you pay any money towards that particular asset, that is called as down payment. I repeat, at the time of purchase, if you pay, at the time of agreement, hire purchase agreement, if you pay any money to the vendor, that is called as down payment. So how much is the balance? Balance is 8,80,000. Okay. Now, how much is the payment you are going to make? Sorry, 8 lakh is this one. How much payment? 8 installments. 8 installments into per installment, how much it is? 120,000, sir. 120,000, sir. So how much it would be? It would be 9,60,000. It would be 9,60,000. How much total payment you are paying? 2 lakh rupees in the beginning you are paying. At the end of 8 years, you would have end up paying 9,60,000. you would have ended up paying 9,60,000. So total comes to 11,60,000. Total comes to 1160. Now tell me, in 1160 two prices are included. In 1160 two prices are included. One is cost of the asset. One is cost of the asset. The other one is interest charges. The other one is interest charges. How much is the interest charges, guys? Simple. How much is the cost of the asset? Cost of the asset is 10 lakh rupees. Cost of the asset is 10 lakh rupees, which is also called as cash price. It is also called as cash price, okay? The price at which you can purchase the asset without any hire purchase. Without any hire purchase, how much you are ready to pay? That is cash price, okay? Total, how much is the interest? Interest is rupees 1,60,000. Interest is rupees 1,60,000. Now tell me, guys, this cost is there, no? This cost is there, no? Don't you think it is a capital expenditure? As this is the asset, don't you think it's capital expenditure? As well as interest which you are paying every year, don't you think it's a revenue expenditure? Don't you think it's a revenue expenditure? Capital expenditure will go to where? Capital expenditure will go to balance sheet. Capital expenditure will go to balance sheet. And how much will be the revenue expenditure? Revenue expenditure will, revenue expenditure will go to where? Revenue expenditure will go to P&L account. P&L account every year, right? Every year so much will go to P&L account. How much is the interest portion? That much will go to P&L account. So far is it clear? So far is it clear? Have you guys got it? Total price paid, out of total price paid, some amount will be cash price. That is the price at which you can purchase the asset without paying any interest. I mean in the beginning only. Or if you go for a installment payment, you might pay up ending more money. The additional money which you are paying is a interest, and interest is revenue in nature, whereas cost of asset is capital in nature. Now tell me one more thing. Now you guys should tell me one more thing. Okay, sir. If we know total cost is 1160, if you know our total cost is 1160, don't you think we should split it? Yes, sir, we have to split it. Why, sir? Because interest is revenue in nature, boss. Interest is revenue in nature, whereas cost is capital in nature. So this we have to write off in the P&L, this we have to take it to the balance sheet. So we have to split the interest. Okay, sir, we split the interest. No, we came to know that 1,60,000 is the interest. But out of this 1,60,000 also, first year how much, second year how much, third year how much, fourth year how much, fifth year how much, sixth year how much, seventh, eighth, how much? We don't know, sir. But why we want it? Because you can't write off every amount in the first year of the P&L. You can't write off every amount in the last year of the P&L or in between the P&L. You have to proportionately write it off. So in the hire purchase, we need cost, we need total interest, we need interest for the period. Sir, what is the journal entry and all those things I will tell later. But did you guys understand that what are the amount we need? What are the amount we need to accounting? Because P&L every year we have to write it off. Asset beginning only we have to take and go at the cost price, right? So much is clear, huh? So much is clear? Yes, fine. Now to split this, there are different methods. Some data they will give. For example, in our example which we gave, we don't know the interest rate. Boss. In some question they will not give how much is the cash price. In some question they will not give how much is the installment money. So when all these three things are there, they are not there, how we are going to compute the value? That we are going to see now. So the first is they have given situation number 1. They have given situation number 1, that is when the rate of interest, total cash price, installment are given. So 3 things are also given. So 3 things are there. One is a rate of interest, the other one is installment, the other one is cash price. Method 1 or step case 1. In the case 1, rate of interest is also given, installment is also given, cash price is also given. In this case, what we are going to do is, we are going to do something called amortization table. We are going to do something called amortization table. How, sir? I will explain that. See, there is one illustration. If we look at an illustration, we will understand. If we look at an illustration, we will understand. So cash price is what? The price at which you can purchase a goods if you do not enter into a hire purchase. If you do not enter into a hire purchase, that is the price at which you are going to purchase the asset. Okay, sir, done. See here. X purchases a car on a hire purchase system on 1/1/2018. The total cash price of the car is 450. So the cost of the car is 450, sir. Payable rupees 90,000 down and 3 installment of 170, 150, 108, 460 payable at the end of first, second and third year respectively. Interest is to be charged at 10%. So we know the interest, we know the cash price, we know the installment money. So installment of 170, 150 and 108 will be there, no? Installment will be having 2 things in it. Installment will be having 2 things in it. One is towards cost of the asset or towards cash price of asset. One more is towards interest charges. Towards interest charges. Okay, sir, done. Done. Listen very carefully. Table how I am going to do. Listen. There are different years. Okay. Which are the years, sir? Starting from 1/1/2018. Starting from 1/1/18 and later we are paying at the end of every year, no? Payable 3 installment at the end of first, second and third year. So it is 31/12/18 first year end, 31/12/19 second year end, 31/12/20 third year end. 3 years we are going to pay so much, right? Yes, sir, we are going to pay so much. Now the question comes, how much is a installment you are going to pay? How much is a cash outflow? Cash outflow. Cash outflow is how much, sir? In the first year, listen here carefully. In the question they have given 90,000 is a down. So 90,000 is a down payment, which means you are entering into contract on 1st January, right? On that particular day you are paying 90,000. Okay. In the second year, how much you are going to pay? In the second year you are going to pay 170,000, sir. Okay, sir. In the third year, how much you are going to pay? In the third year you are going to pay 150,000, sir. In the fourth year, how much you are going to pay? In the fourth year you are going to pay 108,460. 108,460. Okay. Okay. How much was the opening balance? How much was the opening balance? How much is the closing balance? I mean principal we have to pay. Give me a second. Principal payment. Principal payment means towards a cash price. Cash price of asset is also called as principal payment. Towards the principal of the money. I mean towards the principal amount if you pay some portion, it is called as principal payment. Then you will find out how much is the interest. Then you will find out closing value or closing balance. Okay, sir, done. Now tell me how much was the opening? How much was the opening? Opening was, how much was the cost of the cash price of the asset? It is 450,000. So opening was 450,000. Okay. How much principal payment you paid during the year? You paid a principal payment of 90,000 rupees, sir. So in that, any interest is there? No interest, because first day itself you are paying. So interest is nil. So closing balance will become how much? Closing balance is 450 minus 90,000, which will come to 360,000. So this is the closing balance after entering into a hire purchase agreement. Now at the end of the year, that would be the opening balance for that, 360,000. Listen carefully. Interest, how much you paid? Simple, sir. Interest is nothing but, interest is equal to opening balance into rate of interest into number of months or days used during the period divided by total number of months or days during the period. Normal interest computation only. So tell me, on 31st of December 2018, how much was the opening balance? Opening balance was 360, sir. How much was the interest rate? Interest rate is 10%, sir. Okay. How much is the number of days we used? For whole 12 months we used it. From the 1st January till the 31st December we used it. Whole 360. So it is 12. 12 by 12 it is. Which is basically 1. So interest is how much, sir? Interest is 36,000. Out of installment, payment towards principal is equal to installment amount minus interest for the period. So how much is the interest for the period, guys? Interest for the period is rupees 36,000. No, here we paid interest as 36,000. How much installment we are paying? 170,000 is the installment. So out of 170,000, 36,000 is going towards interest payment. So towards principal payment, how much it is? Towards principal payment it is 134,000. So now how much principal is remaining? 360 was the opening. This year we are paying 134,000 towards principal. So 360 minus 134 will come to 226,000. So next year opening balance was 226,000. Okay, sir, we used it for the whole year. So upon the 10% it is, that is 22,600. Okay, 22,600. And so out of 150,000, 22,600 is towards the interest. Then towards principal payment, how much it is? Principal payment is nothing but installment minus interest. Closing balance is nothing but opening balance minus principal payment. Cash outflow is nothing but installment and down payment. Okay. Okay, so out of 226,000, out of 226,000, you are paying 22. Out of 226,000 minus 10%, you are paying around 2,03,000. I mean, the balance is, how much was the outstanding? Outstanding was 226,000, no? Okay. Wait. Out of 150,000 installment, you paid 26,000, 22,600 towards interest. So towards installment, how much you paid? You paid 127,400 towards a principal. So how much is the closing balance of principal now? 226,000 was the opening balance minus this year payment is 127,400. So it will come to 98,600. 98,600. So the opening balance will become 98,600. This year also full we used. So 9,860 is a what? Interest. So how much payment we made? We made a payment of 108,460. So out of 108,460, 9860 is towards interest, which means rupees 98,600 is towards a principal payment. At the end of the day, balance will be nil. At the end of the day, balance will be nil. So when we recognize our asset at, we recognize our asset on 1/1/18 at rupees. What is the cash price? What was the cash price? Cash price was 450,000. No, cash price was 450,000. Every year we recognize. Every year we recognize interest in P&L. Interest in P&L. For the first year we are going to recognize 36,000 as an interest in P&L. For second year we are going to recognize 22,600. For third year we are going to recognize 9860. So tell me guys, is the first case is clear? Is the first case is clear? You people know why we want to split anta. You know, right, why we want to split? Because one is revenue in nature, one is capital in nature. Revenue in nature we have to write it in the P&L account. The other one is capital in nature, that will go to balance sheet. That's why we have to split it. And at the time of recording the asset also we have to recognize the liability too, which we have to pay towards our hire vendor. Last step 31/12/2020. What is the problem, sir? See, interest we calculated on the opening balance. Opening balance was 98,600. Upon the 10% will come to 9,860. 98,600 was the opening balance. On the 10% will come to 9,860. So out of the payment of 108,460, 9,860 is towards the interest. So the remaining is towards a principal, which is basically 98,600. So the balance will become nil. I mean the balance payable to our vendor will become nil. Clear? Great. Is the first case clear for you guys? Is the first case clear? Great. Take a screenshot. Take a screenshot. Take a screenshot. Take a screenshot. Screenshot number 1. Done, sir. Go for screenshot number 2. Screenshot number 2. Okay, I will give 2 minutes. Kindly process what you have learnt. Okay. We'll go to the second method now. When the rate of interest and installment are given but the cash price is not given, that is here where it is somewhere we tick second case 2. Case 2, what is happening, sir? Rate of interest is there, installment is there, cash price is there. Whether rate of interest is given, yes, rate of interest is given, installment is given. Whether cash price is given, no. Whether cash price is given, no. So if we apply the same table, let us assume we apply the same table, that is year opening balance, installment, we have principal payment, we have interest payment, we have a closing balance. Listen here very carefully. Now let us assume in the year 1, do we know the opening balance? Opening balance only we don't know, X. Let us assume installment is there, 1 lakh rupees. Okay, out of that principal payment, do we know how much? We don't know. Before that we have to compute interest. To compute interest, upon what we are going to compute interest? Upon opening balance we are going to compute interest. Upon opening balance we are going to compute interest. Whether we know how much is a interest, how much is a opening balance itself we don't know. If we put x and all x, last step, no, it will be huge. Okay, 2 methods also I will show. Is that fine? I will show in both 2 methods. There is one method that is reverse working, because last installment will be paid towards the last payment of the principal which is available. Okay, I will show in the 2 methods, don't worry. Here what is missing? In the first case everything was fine, that was new marriage, everything was fine. Now the complication started. Sorry, I'm just kidding. See here, very careful. There is one illustration, we'll see illustration. X purchased a TV on a hire purchase system. As per terms, he is required to pay 3,000 down, rupees 4,000 at the first year, rupees 3,000 at the end of second year, and rupees 5,000 at the end of third year. Interest is charged at 12% per annum. You are required to calculate the total cash price of TV and interest paid with each installment. So simple, listen here, there is how many years? There is 3 years, no, 1, 2 and 3. There is 3 years. There is 3 years beginning, 1 beginning, 1 ending, 1 beginning and 1 ending, 2, 3, all these are endings, 2, 3 are endings. Let me leave a line and let me write, because it might be, I will. Or I will write 0 years. This is 0 means beginning of the year, okay. First year end, second year end, third year end. 0 means beginning of the year. Okay. Do we know how much is the cash price? Opening balance is cash price, no, in the beginning. Do we know how much is the cash price? We don't know, sir. So let's take it as X. Okay. How much installment we paid? Installment is nothing but down payment. How much we paid? 3,000 is a down payment we paid. 3,000 is a down payment we paid. Out of this 3,000, everything will go towards a principal only, because interest payment will be 0. Why, sir? Because you use the X amount of goods for how many months? 0 days out of 365. Something multiplied by 0 is 0. So interest payment is 0. So the principal payment is 3,000. Principal payment is 3,000. Closing balance will become X minus 3,000. Closing balance will become X minus 3,000. So the opening balance will be how much? Opening balance will be X minus 3,000. Okay. Opening balance is X minus 3,000. Done. So installment, how much you are paying? Installment, how much you are paying at the end of first year? You are paying 4,000 rupees installment. If anyone don't understand at any point of time, please let me know at that point of time only. Okay. So 4,000 what you are paying towards interest in the installment in the first year. So 4,000. Okay. So interest will be on how much, sir? Interest will be on the principal opening balance, that is X minus 3,000 into how much is the interest rate? How much is the interest rate? Interest rate is 12%, right? Interest rate is 12%, that is 0.12. So how much it will be? How much it will be? X into 0.12 will become 0.12x minus 3,000 into 12%. 3,000 into 12%, 360. So the interest is so much. Interest is so much. So the principal will be how much, sir? Principal will be 4,000 minus 0.12x minus 360. 0.12x minus 360, which will be basically 4,000 minus 360, which will come to 3640. 3640 minus 0.12 x. 3640 minus 0.12 x. Okay, sir, done. So closing balance will be how much, sir? Closing balance will be 4,000 minus principal repayment, that is 3640 minus 0.12 x. So how much would be the closing balance, sir? Closing balance would be 4,000 minus 3640. Oh, closing balance, here it is, sorry, that is installment. Why I am taking installment? We know the how much is payment. Give me a second. Wrong. It is not 4,000. How much was the opening balance? Opening balance was X minus 3,000. From that we have to reduce principal payment, that is minus 3,640 minus 0.12x. So x minus 0.12x, it will be how much, sir? 0.88x. 0.88x and minus 3,000 minus 3640. Minus 3,000 minus 3640. You are going to get minus 6,640. Minus 6,640. So the opening balance is 0.88x minus 6640. Minus 6640. Tell me, guys, tell me whether so far it is clear or not. Tell me whether so far it is clear or not. Hello, people, clear? Okay. Now, how much is the installment at the end of second year? Installment at the end of second year is 3,000, sir. Installment at the end of second year is 3000. Okay, installment at the end of second year is 3000. Deal. So how much is the interest on this? Interest on this is simple. Interest is 0.88x minus 6640 into 0.12, that is 12%. So how much will be the interest? Interest will be 0.88 into 12% into 0.12, 0.1056x minus 6640 into 12% minus 796.8. 796.8. So principal payment is how much, sir? Principal payment is 3000 minus 0.1056x minus 796.8, which is basically 3000 minus 796.8, 2203.2 minus 0.1056x. Okay, done. How much is the closing balance, sir? Closing balance is, how much was the opening balance? Opening balance was 0.88x minus 6640 minus, how much is the principal payment? Principal payment is 2203.2 minus 0.1056x. Okay, sir. So how much will be the closing balance of this year? 0.88x minus 0.88 minus 0.1056, which will come to 0.7744x, and 6640 minus 2203.2, which will come to minus, oh sorry, it is minus, no. So 6640 plus 2203, which will come to 8843.2. 8843.2. Okay, sir, done. So far it is clear? Yes, it is clear. So far it is clear. There is one more method. Don't worry if you are not understanding, if you are getting complicated, feeling like complicated, there is one more method. Don't worry. But this method is based upon equation. Third year, what is the opening, boss? Opening is 0.7744x minus 8843.2. How much is the third year installment? Third year installment is 5000, sir. Third year installment is 5000, no? Third year installment is 5000. Okay, sir. So how much is the interest payment? Interest payment is 0.7744x minus 8843.2 into 0.12, that is 12%. So how much it would be? 0.7744 into 0.12 will come to 0.9292, which is basically I will write 0.929x minus 8843.2 into 12%, which will come to 1061.184. 1061.184. Okay. Done. So how much is the principal payment then? Principal payment is, sir, 5000 minus 0.092, right? I think 0.092. If that goes wrong, no, whole thing will be last moment into 12%. 0.09. Oh my god, big blunder it would have. 0.0929 x. So fine. 0.0929 x minus 1061.184. So how much it would be the balance, sir? Balance would be 5000 minus 1061 minus 1061.184, which will come to 3938.816 minus 0.0929x. Okay, fine. So how much would be the closing balance? Closing balance, last step. We know that after payment of last installment, closing balance will be 0. After payment of last installment, closing balance will be 0. So how much would be the closing balance, guys? 0.7744x minus 8843.2 minus payment towards principal minus 3938.816 minus 0.0929x. This is closing balance. As closing balance shall be nil after payment of all the installments. Can we tell like this? Can we write it in the equation? Yes, sir. Why not? Okay, what is the equation? 0.7744, right? 0.7744x minus 8843.2 minus 8843.2 minus 3938.816 minus 0.0929x is equal to 0. Because we know that closing balance final end will be 0. So can we write it like this, sir? How, sir? 0.7744 minus 0.0929, which will come to 0.6815 x minus 8843.2 plus 3938.816, 12,782.016 is equal to 0. So if minus will go that side, it will become positive. So we can say 0.6815 x is equal to 12,782.016. So x is equal to 12,782.016 divided by 0.6815. So 12,782.016 divided by 0.6815 rupees 18,755. Rupees 18,755. Of course, due to the round off and all, it might happen something. So we can say somewhere we went wrong. We'll check. If we had gone wrong, we will come to know here. 0, 1, 2, 3, 4, 3. Okay. Opening balance 18,755. Installment, first down payment 3,000, right? Down payment is 3,000. Okay, down payment is 3,000. Fine. How much is principal payment? Principal payment, interest, principal payment, interest and closing balance. No, principal payment, interest and closing balance. Here interest is 0, so whole 3,000 is towards principal payment. Closing balance is 15,755. So first year there was 15,755. Installment was how much? Installment was 4,000. Correct. Installment was 4,000 only. So the interest was how much? Interest was 15,775 into 12%, which is basically 1893. 1893. So principal payment is how much, sir? 4,000 minus 1893, which is 2107. 2107. So the closing balance will be how much? Closing balance is 15,775 minus 2107, which is basically 13,668. Second year, how much was the balance? 13,668 was the balance. So second year, how much you are paying? Second year, you are paying 3,000. Yeah, your total only, it's not total only, you are paying how much? 3,000 plus 4,000, 7,000, 7,000 plus 3,000, 10,000, 5,000, 15,000. Where we went wrong? Any equation we went wrong? Where we went wrong? Anyone have the idea where we went wrong in equations? Yeah, reverse method is easy to understand. That I will explain. But for the time being, I am explaining in normal also. So principal payment is 4,000 minus 0.12x minus 360. It became 3640 minus 0.12x. So minus 3640 minus 0. So it becomes 0.88x minus 6640. Okay. Opening becomes so much. So much of the principal payment. So 3,000 minus okay, here it is 88xx minus 6640 into 0.12. So it will become 0.1056x minus so much. So 0.88x 6640 minus, so principal here 3,000 minus 0.10, okay, correct, 0.88x minus 6640 minus 2203.2 minus 1056. We are going to get 0.7744x minus 8843. Opening balance. Okay. In equation it was minus, no, it will become plus here. Sorry, my bad. In equation if it is minus over here, so x minus 3,000 minus it is something like this. X minus 3,000 is opening balance minus 3640 minus 3640 minus 0.12 minus 0.12x. So it is x minus 3000 minus 3640 plus 0.12x. Minus into minus it will become plus. No, there we went wrong. So give me a second, let me correct it. So here it will become plus, no, here it will become plus. So how much it will become? Give me a second, let me quickly find out how much it is. Okay, okay. So interest was how much, sir? Interest was x minus 3000 into 12%, which will come to 0.12x minus 3000. 3000 into 12%, sorry, 3000 into 12%, which will come to 360. So how much was the principal payment, sir? Principal payment was 4000 minus 0.12x minus 360, which was basically 4000 minus 360, 3640, 3640 minus 0.12x. So closing balance will be x minus 3000 minus 3640 minus 0.12x, which is basically x plus 0.12. Minus will become plus, no, minus will become plus when we take off the brackets. So 1.12x minus 6640 is the balance. 1.12x minus 6640 is the balance, closing balance. So here opening balance is 1.12x minus 6640. Okay, sir, done. So next again 3000. So interest will be how much? Interest will be 1.12x minus 6640 into 12%. So how much it would be? 1.12 into 12%, 0.1344x minus 6640 into 12%, 796.8. So how much is the principal payment, sir? Principal payment is 3000 minus 0.1344x minus 796.8. So it is 3000 minus 796.8, which will come to 2203.2 minus 0.1344x. So right, So how much would be the opening balance? Opening balance was 1.12x minus 6640 minus 2203.2 plus 0.1344x. So how much would be the closing balance? 1.12 plus 0.1344, which will come to 1.2544x minus 6640 plus 2203.2, which is minus 8843.2. So the opening balance is 1.2544x minus 8843.2. Okay, so how much would be the interest, sir? Interest would be 1.2544x minus 8843.2 into 12%. So which is basically 1.2544 into 12%, 0.1505 x minus 8843.2 into 12%, which is 1061.18. So how much is the principal payment, sir? Principal payment is 5000 minus 0.1505x minus here it will become plus, no? Oh my god, equation. I think we wouldn't have taken table only. Nicely we would have made it separate. Instead of table, we would have made it separate, right? Year 0, opening balance x, principal payment is 3000. No, first year we are making a principal payment of 3000. So closing balance is how much, sir? Closing balance is x minus 3000. Okay, year 1 opening balance x minus 3000. Opening balance x minus 3000. Installment, first year how much installment we are paying? Installment we are paying 4000. Installment is 4000. Interest it is x minus 3000 into 12%. So it is 0.12x minus 3000 into 12%, rupees 360. So principal payment is how much? Principal payment is 4000 minus 0.12x minus rupees 360. So 4000 minus 0.12x plus 360. While taking off the brackets, we did so it is 4360 minus 0.12x. 4360 minus 0.12x. So closing balance is how much? Closing balance is x minus 3000 minus principal payment, that is 4360 minus 0.12x. Again I would have made same mistake. So x minus 3000 minus 4360 plus 0.12x. So closing balance is how much, sir? 1.12x minus 7360 minus 7360. Okay, done. So second year, how much is the opening balance? Opening balance is, guys, if I go anywhere wrong due to this symbols and all, please let me know. Okay, please let me know at that point of time. So opening balance is how much, sir? Opening balance is 1.12x minus 7360. 1.12x minus 7360. So how much is the installment in the second year? How much is the installment in the second year? In the second year, installment is 3000. In the second year, installment is 3000. Okay. How much is the interest? How much is the interest, sir? 1.12x minus 7360 into 12%, which will come to 0.1344x minus 7360 into 12%, 883.2. 883.2. So how much would be the closing balance, sir? Closing balance is, how much is the principal payment? Principal payment is 3000 minus 0.1344x minus 883.2. So which will be basically 3883.2 plus minus 0.1344x minus 0.1344x. This is principal payment. So closing balance is how much, sir? Closing balance is 1.12x minus 7360, that is opening balance, minus 3883.2 minus 0.1344x. So which is basically 1.12x minus 7360 minus 3883.2, that is 3000. Okay, plus it is 7360 plus 3883.2, 11,243.2, 11,243.2 plus 0.1344x, 1.12 plus 0.1344, which will come to 1.2544x minus 11,243.2. Done. Now going to third year. How much was the opening balance, sir? Opening balance was 1.2544x minus 11,243.2. How much is the installment payment? Installment payment is 5000. Installment payment is 5000. Okay, installment payment is 5000. As installment payment is 5000, how much is the interest? Interest is 1.2544x minus 11,243.2 into 12%. So it is 1.2544 into 12%, that is 0.1505 x minus 11243.2 into 12%, 1349.18. This is interest. Okay, was done. Opening balance, installment, interest. So how much is premium payment? Premium payment is 5000 minus 0.1505 x minus 1349.18. So it is 6349.18 minus 0.1505x. Closing balance is how much, sir? 1.2544x minus 11,243.2 minus 6349.18 minus 0.1505x. So which is basically 1.2544 plus 0.1505 1.4049x 11243.2 plus 6349.18. It is minus 17,592.38. Okay, and we know that this is equal to 0. Closing balance it is, this is equal to 0. So 1.4049x is equal to 17,592.38. So x is equal to 17,592.38 divided by 1.4049. So 17,592.38 divided by 1.4049, which will come to 12,522 rupees, 12,522. So x is equal to 12,522. X is our cash price. So this is one method. This is one method. Of course, there due to that lines and all, we got confused, and that negative, positive and all ulta we took. This is hardly a 5-10 minutes job. So have you guys understood? Have you guys understood this method, regular method, by taking unknown figure as a x? Hello? Hello? Yes. Now one more method is there. One more method is there. What is one more method, sir? Reversal workings. Reversal workings. How? Simple. Listen here. Last year, let us assume last year, because first year we don't know, but last year can we? Yes, listen here. Last year installment will be having two things, right? One is principal outstanding at last year beginning. The one more is interest on principal outstanding at last year beginning. Yes or no? Have you guys got this? Last year installment will be having two things. One, last year how much principal outstanding, so much, upon that interest is there. So give me a second. Yes, is it clear? Is it clear, guys? What are the things will be there in the last year installment? Yes. So listen here, we are going to do the reverse workings. What do you mean by that, sir? So can I say last year installment is equal to principal outstanding in last year plus interest on principal outstanding in last year. Yes, sir. Okay. So here how much is the last year installment? Last year installment is 5,000. Last year installment is how much, sir? Last year installment is 5,000. Okay, last year installment is 5,000. How much was the principal outstanding in the last year? We don't know. Let it be X plus interest was how much, sir? Interest was 12%, that is 0.12 on this X, no? 0.12 on this particular X. Why, sir? Because X is the outstanding. So 5,000 is equal to X plus 0.12 X. So X is equal to 5,000 divided by 1.12. So 5,000 divided by 1.12 rupees 4464. Rupees 4464. Sir, what is this rupees 4464? This is nothing but last year opening outstanding, right? Last year opening outstanding. So guys, is it clear? So far, is it clear or not? So far, is it clear or not? Okay. Next, this is third year. In the second year again, let's take outstanding at beginning. Outstanding at beginning as Y. Okay, sir. Outstanding at beginning is Y. How much we paid? Installment? How much we paid installment? Installment we paid for the principal payment of second year and interest on second year outstanding. Tell me how much is the principal paid? Listen, guys, listen. At the third year also we have our opening balance. For example, second year beginning you had 10,000. Third year beginning you had 4464. Which means you paid 536. In the second year you only paid 5,536. So how to find out how much is the principal paid in the second year? What was the principal at the beginning of the year? It was Y minus how much was closing at the closing? Closing we computed 4464. So it is how much principal payment we paid? We paid Y minus 4464. Interest how much we paid? Opening balance, that is Y into 0.12, which is basically 0.12Y. Okay. So how much we paid in the second year? how much we paid in the second year? In the second year we paid 3000. In the second year we paid 3000. So this 3000 includes payment towards y minus 4464 plus 0.12y, which is interest. So it is 7464 is equal to 1.12y. 7464 is equal to 1.12y. So y is equal to 7464 divided by 1.12, which will come to 7464 divided by 1.12, which will come to rupees 6664.28. What is this? This is how much was beginning in the second year. This was how much was beginning in the beginning of the second year, right? This was what? This was beginning of the second year. Okay, sir. Okay. So now we have to find out. How much was beginning of the first year. So to find out how much was beginning of the first year, installment is what? Installment of first year is paid towards what and all? Is paid towards principal payment of first year, and interest payment on first year outstanding. Let us assume first year outstanding as X. First year outstanding as Z. Now principal repayment is, there was an outstanding of Z, and at the end of the year we are having 6664. At the end of the year also we are having balance of 6664. So much is paid. That is Z minus 6664 is paid in the first year as a principal amount. Interest is how much? Z into 0.12. So how much principal we paid? How much installment we paid? Installment we paid was 4,000. Installment we paid was 4,000. No. Installment in the beginning of the year we paid was 4,000. Okay. 4,000 is equal to Z minus 6664 plus 0.12Z, because your installment include two factors. Okay, sir. So now 10,664 is equal to 1.12Z. So Z is equal to 10,664 divided by 1.12. So which is basically rupees 9,521. So tell me, outstanding of first year is equal to what? Cash price minus down payment. So how much is the cash outstanding? 9521. How much was the cash price? We don't know. Let it be A. How much is the down payment? Down payment is 3,000, right? Down payment is 3,000. So minus will go that side. So A is equal to 12,521. This is one more method. That is reversal method. Of course, for the explaining purpose, I explained like this. See how your study material people say. They will go chill. Listen. Third year installment was 5,000. So 5,000 they will take it as 112%, because 100% of principal payment and 12% of interest. So 100 is equal to question mark they will take. So in that they will get interest as 536 and cash price of 4464. So this is what? This is opening balance in the third year. So next what they will do? Next they will add the second year total payment, that is 7464. So 7464 is a second installment. In that again they are going to find out the interest by doing the same thing. They will get an interest of 800. So out of the interest 800, out of interest you will get 800 is towards interest and 2200 is towards your that one, what it is, cash price. Okay, later how much would be the cash price? Cash price would be 6664. First installment you will get, so total comes to 10,664, and in that interest you will get 1143 and cash price 2857. Balance is how much, sir? Balance is 9521 they will get. Also they have paid 3000. They will get a down payment of 12,521. That's it. That's it. We'll give you people 3 minutes. Kindly go through it. Kindly go through the answer, and if you don't understand, please let me know. Kindly go through the answer. Under this also you go through. Under this what I explained, this also you try to understand. And look at that. 5 minutes I will give. 5 minutes I will give. Okay. Fine, fine, fine. Fine. You people understood this? Have you people understood this? Yes. Yes. Fine, fine, fine. Going to third method. Going to third method. When only installments are given but cash price and rate of interest are not given, which means situation 3, you have a rate of interest, you have installment, you have cash price, right? We'll do one thing. Shall we take a break and we'll continue? 15 minutes break shall we take and we'll continue? Yes. Yes, we'll take a break. Around 5:45 we will continue. Okay. Okay. Bye. Shall we start? People? Yes. See here now, case number 3. Case number 3. That is when only installments are given. I mean, installment is given, ROI is not given, cash price is not given. All they give is a installment information. In that, how to divide how much is principal payment, how much is interest payment, sir? We'll see. Illustration number 3. X and Co purchased a motor car on April 1, 2019 on a hire purchase. Give me a second, I will paste it over there. X and Co purchased a motor car on 1st April 2019 on hire purchase, paying rupees 60,000 cash down and balance in 4 annual installment of 55,000, 50,000, 45,000 and 40,000 each. Okay, sir. Installment comprising of equal amount of cash price at the end of each accounting period. You are required to calculate the total cash price and amount of interest in each installment. Down payment, see, they are telling only so much. That is, they are giving only information regarding the installments. So, can we find out how much is the total payment? That is, total payment is nothing but installments plus down payments. So we are paying down payment of 60,000, first installment of 55,000, second installment of 50,000, third installment of 45,000, fourth installment of 40,000, and total comes to 250,000. Total comes to 250,000. Yes, sir. Total comes to 250,000. Okay. As each installment comprises equal amount of cash price, they are telling here, see, each installment comprise of equal amount of cash price. I mean all the installments will be having equal amount of cash price. This might be having, this might be having 30,000. If this is having 30,000, this also having 30,000, this also having 30,000, this also having 30,000. I mean they are having a equal installments. They are having a equal installments of principal. Okay. So if your cash price is total, if your cash price is X, I mean after deduction of a down payment, if it's X, then each installment will be having X by 4, X by 4, X by 4 and X by 4. Each installment will be having X by 4, X by 4, X by 4 and X by 4. Okay, done sir. See here. Difference in installments amounts are due interest amount only. So of course difference between installment and the principal amount is what? Interest only. Assume X is the amount of cash price in each installment and I is the amount of interest. X is the cash price, I is the interest. X is the cash price, I is the interest. So in a fourth installment which is 40,000, I will be the interest and X will be the cash price. X will be the cash price. Fourth year. Third year outstanding will be how much? X of fourth year plus X of third year. Second year again X, first year again X. So we can write it like this. Fourth year X plus I is equal to 40,000. X plus I is equal to 40,000. Next year X of third year plus, in the beginning 2x was there, no? 2x means interest will be 2i, no? Double interest, that is 45,000. Next x plus 3i is how much? 50,000. Next x plus 4i is how much? 55,000. X plus 4i is equal to how much? 55,000. Okay. If we solve the equation, x plus 2i is equal to 45,000 and x plus I is equal to 40,000. If we solve the equation, I is equal to 5,000. If we apply I as 5,000 here, x will be how much? X will be 35,000. So we know the X. Each installment it is having 35,000. So how many installment it is? 4 installments, right? So 35,000 into 4 will come to rupees 1,40,000. And cash price is how much, sir? Cash price, I mean down payment is how much, sir? 60,000. So total 2 lakh is what? 2 lakh is your cash price. See here. Cash price is 2 lakh, higher purchase price is 250, total interest is 50. Is it clear? Hello? Is this method is clear? No. Okay, listen here, I will tell again, listen. Let us assume your cash price is X. Every year you are paying 1 by 4x. I mean, if you are outstanding of first year, outstanding at first year, because your cash price will be X plus down payment 60,000. Cash price will be X plus 60,000. But how much is your this one? 1 by 4x, 1 by 4x, 1 by 4x, 1 by 4x, right? 1 by 4x, 1 by 4x, 1 by 4x, 1 by 4x. This is what, sir? These are the cash payments included in the installment. In the fourth year, how much would be the outstanding? In the fourth year, outstanding would be 1 by 4 only, no? In the fourth year, outstanding would be 1 by 4 only. So we apply interest on this, I into 1 by 4x. In the second year, sorry, in the third year, outstanding would be this 1 by 4, this 1 by 4, 3 by 4, like that. Every year outstanding will be something. Here it is full outstanding. Here it is full outstanding. So we keep on adding it. So interest upon this will become how much? 1 by 4 interest I means how much it would be? You can say I by 4x. Here how much it would be? 2 by 4. 1 by 2 it will be. 1 by 2. I mean interest will become double. So what we will do is every year we will take normal cash price as normal, as it is same in all the 4 years. Every year due to this factor coming reverse, interest is becoming more and more. Interest is becoming more and more. In the first year you are going to pay 4 times the interest which you are paying in the last, because 4 installments are pending. Because once your principal goes on decreasing, your interest goes on decreasing. Is it clear now? Is it clear? Later you take 2 equation and you solve it. That is x plus I is equal to 40,000. First one is 40,000, no? First installment. I mean 40,000 last. And x plus 2i is equal to 45,000. So by solving the equation, positives will become negative. Positive x goes. Positive I minus I will become minus I. Positive 40,000, negative 45,000 will become negative 5,000. So we can say I is equal to 5,000. So if we know I, if we apply x plus I is equal to 40,000, x will become 35,000. X will become 35,000. Hope it is clear. Hope it is clear. Hello. Yes. Okay. This is third method. Now there is one more method, okay? One more method is there. Situation number 4. Situation number 4. When reference to annuity table rate of interest and installments are given but the cash price is not given. When reference to annuity table rate of interest and installment are given but the total cash price is not given. In such question, the reference to annuity table gives the present value of the annuity for the number of years at the certain rate of interest. See, what we have to do is, the installment will be there, no? For installment, if we apply PVAF, we are going to get a total cash price. Listen here. On 1/1/2018, X purchased a plant from Y on a hire purchase system. The hire purchase rate was settled at rupees 60,000, payable as to 15,000 on 1/1/2018, 15,000 at the 3 successive years. So 15,000 is what? 15,000 is a cash down payment. Also next 15,000 is what? 3 years it is installment. So total it will be 45,000. Hire purchase rate is 60,000. It's not a cash purchase. It is not a cash purchase. It is hire purchase. Cash price. It's not a cash price. Interest was charged at 5% per annum. The asset was to be depreciated in the book setup of a purchaser at 10% per annum on a reducing balance method. Give the present value. See here they have given rupee 1 per annum at 5% will be 2.7232. So what we have to do is simple. How much is your installment? Installment is 15,000, no? Installment is 15,000. Multiply that with the present value factor. because present value factor is the factor which will take out the interest factor. Your inflation is nothing but interest. Your inflation, your interest banker will give, no, that is nothing but towards the inflation only. If you have put something in FD, your money is not increasing, face value is increasing only, value of money is not increasing, it is balancing. So after 4 years, sorry, after 3 years, your 1 rupee will be 3 rupee will be valuing today's 2.7232, which means the remaining is going towards interest. So 15,000 into 2.7232 will do 15,000 into 2.7232. You are going to get 40,848. You are going to get 40,848. So this is what? This is your cash price or a principal payment included in the installment. For that, if you have to add, what? You have to add a cash, down payment. You are going to get total 55,848. That is your cash price. Hope this method is also clear. Simple. Installment should be multiplied with the PVAF. You are going to get the total principal payment. For that, if you add down payment, you are going to get a cash price. Is it clear? If they give a present value, it would be great. Is it clear, people? Yes, fine. We can go for the accounting method. We'll do one thing. We'll call it off for the day. Okay. Actually, I'm having some headache, so I don't know, migraine or something. Fine. We'll call it off for the day. Okay. We'll continue tomorrow. Tomorrow's timing I will let you know. Fine. Hello. Fine. Okay. Bye bye. Take care.